Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name is Dean, and let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 22nd, 2025, and this is a warning to all crypto investors. This isn't at all clickbait, nor is it, overly dramatic, sensational. I hate that. But this is going to be about why, based off of my most recent analysis, if you're invested in crypto, you should pay very close attention within the next 3 weeks. And whatever you do within that time frame will likely make you or lose you a lot of money. Okay, again, this is not being overly dramatic. For quite some time, I'm going to get into the analysis, but let me preface this. For quite some time in the cryptocurrency space, we've been going sideways. You made moves here and there, and in some assets, some disparate assets sprinkled throughout the ecosystem have made important moves. But generally speaking, you could have been invested and, your portfolio goes up a little, goes down a little bit. It's very passive. Not much happened for quite some time, right? That's about to change in a major way based off of my most recent analysis, which means there's going to be a massive exchange of capital amongst market participants. Meaning, some people are going to make a lot of money, right? Remember, in the market, it's a zero-sum game. If you make money, that means somebody else lost money. So, some people are going to make a lot of money, others are going to lose a lot. And it's going to happen in Q4 with a very high degree of probability and into Q1. Okay, and I'm going to talk about that in this video. I'm not going to get super specific when it comes to every specific altcoins, just because I run a mentorship group which deals with specific altcoins. And if you're interested in that, be my guest. Take advantage of the Black Friday deal that I'm offering in the pinned comment. But I'm not making this up. And if you follow this analysis, maybe you'll see what I'm trying to say. Let's start. Here is Bitcoin on the weekly time frame. The past 3 weeks in Bitcoin's price action have been extremely informative. Okay? Because they are telling you what is likely going to come next. Okay? And so if you follow my analysis, you know that I've been talking about a bounce. And this bounce is important. And it's actually more important for altcoins than it is for Bitcoin, to be honest. But you're likely getting a bounce, right? And the analysis here is really simple, straightforward, and I'm going to recap it, as quickly as possible. Essentially, you're dealing with a 100-day channel right here, and you've come from the top of the channel all the way to the bottom. And right, basic channel analysis, the bottom is support, the top is resistance, the midline is resistance when you're below it, support when you're above it. You're right now at the bottom and bouncing at the bottom. We're on the daily time frame, so what you can see now is a confirmed bullish hammer candle, the likes of which you don't have anywhere else in this trend. So you're very much likely dealing with some sort of initial break of structure brewing, right? This trend is going to be broken intermittently with an A wave, B wave, C wave. You're breaking the downtrend briefly, temporarily, right? And to say that more technically, you're putting in a wave 2. You're putting in the first counter correction of the initial wave, of the initial impulse. Okay, so that's it. That is what you're seeing. And I also have to mention that when you're considering this 100-day channel, you came to the bottom. Now you just retest the midline as resistance before you break down, right? That is the playbook. That's how you break a channel. If it was a bullish channel, you would do the opposite. You would be coming from the bottom all the way to the top, come back to the midline, retest it as support, and then breaking up and out, okay? But in a bearish channel, you do this, okay? So this is what we're expecting. Now, this move, like I said, is super important for altcoins. Super important. This is the lifeline that altcoins will use to get off of their lows that they've been on for an average of 500 days. Most altcoins have just been, boom, going side to side for 500 days. Some a lot more than that, okay? So that's important, and I've been talking a lot about that in the previous episodes, and actually I even put a time frame on that, and I'm not going to get too much into why and how, but feel free to watch the previous few episodes. But essentially, I'm expecting this bounce to happen within about 23 days at this point. 23 days, it bounces, and we come back to around 101, 102. Okay, so that's happening. That's important. That's super important for altcoins. But let's table that for a second, because I actually want to really focus on Bitcoin specifically. And Bitcoin's important, not just because it's the biggest cryptocurrency, but because the market trends as Bitcoin trends, right? That's the basis of my analysis. It's always been. As soon as I figured that out, I started looking at Bitcoin as the leader of what the market does. And so, all my analysis, that's why I start with Bitcoin in my analysis. Even if I'm not trading Bitcoin, I use it as a proxy for the rest of the cryptocurrency space. And that's true. Now, you're going to see in this bounce, it's likely that even though Bitcoin's only bouncing modestly to these levels, you see the rotation of capital into altcoins is going to be massive and disproportionately so, because that is what we call an altcoin season. And we can see that in certain charts. It's not just some idea or, oh, we're owed this. No. You can actually see it on, a few charts. And even though Bitcoin only goes up 24%, you have some altcoins that can go up 1,000% or more. Okay, so that's that. But what is really interesting and telling, from what's happened in the past 23 days in Bitcoin's price action, is that this right here, the size of this impulse, it tells us what the rest of the impulse is going to be. So, for those of you who may not know, my main tool of analysis, I wouldn't say my main tool, I would say my area of expertise in technical analysis, I would consider to be Elliot wave theory. Okay, you'll see me, I use a bunch of support and resistance. That has nothing to do with Elliott wave analysis per se. I use a bunch of Wyckoff from time to time. I use whatever makes sense. But a lot of times when I see a chart, when I look at corrective price action, when I look at impulsive price action, my brain immediately goes to Elliott wave analysis. And in Elliott wave analysis, it's really informative insofar as the length or size of this initial wave telling us the length and size of the larger impulse. So any impulse in Elliott wave theory goes in 5 waves. Okay, typically it looks something like this. Wave 1, 2 comes up to between zero point 0.5 or 618 of wave 1. Wave 3 goes around 1.618 Fibonacci extensions of wave 1, retracement of wave 2. Wave 4, it retraces typically to between 236 and 382, so 23.6 and 38.2% percent of whatever wave 3 did. Okay, and wave 5 is typically I think wave 3 retracement of wave 4, and then 618 extensions, so Fibonacci extensions of that, or reverse. I think it's reverse 1618. It's like muscle memory at this point, so it's hard for me to articulate it. But I think I would basically, if I wanted to measure a wave 5, I would do something like this: retracement tool. Yeah, so I would measure the 1618. See, it's just, I'll do it and then I'll explain it as I do it. So the 1618, so the inverse 1618 of wave 4 gives you wave 5. Typically, these are general measures, but generally speaking, do expect that wave 3 to come between 1618 and 2 Fibonacci extensions of wave 1 retracement of wave 2. You do have variations of this. You can have an extended wave 3 where you blow way past 2 Fibonacci extensions, but then it has effects on wave 4 and 5. You can have what we had here, which is a leading diagonal, where wave 1, 2, 3, and 4 are kind of concerted like an accordion, and then wave 5 is extended. So you have variations of that. In any case, my point in saying this is that you get 5 waves, meaning if you think that this impulse is finished, that's it, that's all you get, and then Bitcoin magically goes up from here, you don't get it. You don't get it. It's not how it works. It comes in 5 waves. That means we're not done. We're not even close to done. This is the first thing you should understand. Okay? And Elliot wave aside, basic support and resistance should tell you everything you need to know. Basic pattern analysis should tell you everything you need to know. If you know even a little bit of technical analysis, you're convinced of this. Looking at this daily or weekly time frame, you can clearly see the 2 rounded tops. Remember, extremities in technical analysis typically have a rounded feature. The rounded feature comes from, I don't know exactly why this happens, but rounded features typically show that buyers were exhausted and they tried and failed, and they usually try 2 or 3 times, i.e. you typically get double tops or triple tops, and those triple tops are head and shoulders, bearish reversal patterns, right? Or like here, M tops. Okay, so you get those 2 rounded features. Everything about this, there's a million things, million indicators will tell you Bitcoin's extremely bearish. It's hardly a point of contention. Now the question is, how bearish? That should be the question, because any analyst worth his or her salt understands just how bearish this is. And this is the first bit of my warning. My warning isn't, you're about to make a lot of money. No. There's nothing wrong. I mean, even if, let's say, that were the only thing happening, and some altcoins going into alt season are going to disproportionately outperform Bitcoin and just run up 4 to 10x, so what? That's not warning worthy. I'm not going to put out a video saying this is a warning to cryptocurrency investors, and pay extremely close attention within the next few weeks, and whatever you do in the next 20 to 30 days is probably going to determine whether you make a lot of money or lose a lot of money. But there are very few people that are going to be like, oh, nothing happened. It's gonna be one or the other, and it's up to you to decide which one you want to be, because you're going to have to act. Finally, for a long time you hadn't had to do a thing. You're going to have to act. Okay, So the warning isn't that. The warning is, because this is wave one, and in Elliott wave analysis, given wave one and our wave two, which at this point we already know what wave two is going to be because we have wave one. So we have two data points to extrapolate the minimum travel of the entire impulse. Do you get what I'm trying to say? Based off of these two data points, this first wave and now the second wave, even though it hasn't printed yet, wave two always comes to between 0.5 minimum and 0.618. Furthermore, given that we have this 100-day channel and we're in this channel, we've been in this channel for 100 days, we came from the top of the channel, we're going to have to retest the midline. That midline is confluent with the 0.5618 retracement, so we already know wave 2 is going to come up to around here. That being said, what we can do and what I have done, once I got those two pieces of information, I was like, oh, hey, let me just see, and I take my Fibonacci extension tool, the length of wave 1, retracement of wave 2, and what do I get? I want you to pay attention here. Look at this. Do you see wave 3, my purported wave 3? Where does it come to? Exactly what Ralph Nelson Elliott said it would do. It comes to 1618 Fibonacci extensions, between 1618 and 2 Fibonacci extensions of wave 1, retracement of wave 2. Boom, that's my wave 3. A year plus ago, I put out videos saying Bitcoin is going to between $50,000 and $60,000. There is a level of support that is yet to be retested, that needs to be retested, and it's abundantly clear. I was saying this more than a year ago, and for a year we were dilly-dallying in this distribution pattern. I was always convinced it was going to happen. It was a question of when. But the other thing I was convinced of is you're gonna do this. And let's get rid of this real quick. I'll put it back in a second. I'm very clear as to why I've said 50 to 60K for Bitcoin as support. Because I'm looking at basic support and resistance of this descending broadening wedge. I'm extrapolating the upper resistance of that, and that's your retest right here. Furthermore, I also have I'll show you on my master chart because it's more clear there. Here, you can see it on here a bit more clearly. So the descending broadening wedge has an extrapolated resistance level that gets you here. Also, there is a level of support that really shows that around 50 to 60K is your sweet spot. Okay? So I had that here, and you can see how I drew that in. It's basically basic support and resistance. I'm reading the chart, and I'm letting the chart show me what the levels are. Okay? And it's essentially a massive inverse head and shoulders. All right? Massive bullish reversal pattern that is yet to retest. That's all this is. But there's going to be some overrun. Okay? And that's not out of the ordinary. Typically in these bearish capitulation moves, where the final leg of a corrective pattern plays out, and then you get a big flush, and then the market turns around on a dime, and then you enter a bull market. We see it all the time. If you backtest and you look at how bull markets are initiated in different assets, you typically get that move that we're expecting in Bitcoin happened on October 10th for a lot of altcoins. Not every altcoin, but a lot of altcoins. And that's a telltale sign. Did you see a bearish capitulation event, a liquidation event on that asset on October 10th? If you did, chances are that asset just completed its bear market and entered its bull market. Anyway, that's something else. All I'm saying is this is a good level, 55 to 60K, but given now that we're here a year plus later and we actually have wave 1 printed, I can refine this read that much more, and I'll say 50 to 60K is not the support level. 50 to 60K is my target for wave 4. For the beginning of wave 4, the end of wave 3, beginning of wave 4. So what you're going to see is Bitcoin come down to between 50 and 60K. A lot of people are going to get in. We're going to go sideways for a while because that's what wave 4 does. It's a complex flat correction, and it's usually a lot longer than wave 2. So if wave 2 is giving us 23, 24 days, wave 4 is probably going to give you 48, 60 days, something like that. And then after 48 to 60 days, we're going to have a final flush, wave 5, which takes us down a little bit to a minimum of 44. And how do I know it's 44K? And this, I haven't forgotten what I said. I don't want to get too lost in the technicals today because I know not everybody follows, but the warning comes from the fact that the analysis is clearly showing Bitcoin going down much further than most people expected, myself included. Here, the minimum travel for any Elliott wave impulse is wave 1, retracement of wave 2, and 2236 extensions. And as you can see right here on your screen, is that the 2236 Fibonacci extension, which is going to be the minimum. And that basically is the minimum because we know wave 1 and wave 2 have a certain relationship. Wave 3 has a minimal relationship. There's a minimum travel for wave 3 given wave 1 and wave 2. You know, all that stuff crunched in gives you 2236 for your minimum travel for any Elliott wave impulse. So Bitcoin's not getting out of this without, at the very least, saying hello to the $44,000 level. How many people are prepared for this? This is where the warning comes in. How many institutions, how many governments, how many individuals, how many private market participants are prepared for their Bitcoin, which, you know, they hold on to for dear life because for the past couple years, Bitcoin has given you a move from 16K all the way to 120K. People have it in their minds, given recency bias, that that's the safe asset, that's a safe investment. This is how you make money, and they've probably made quite a bit of money holding on, especially if they were lucky enough to get in early. But how many of them are prepared to go down to the $44,000 level? How many people, if they are leveraged, and by leveraged, I don't necessarily just mean trading futures. You can be leveraged as an institution basically by borrowing other people's money, OPM, and building a position. That's leverage. You use other people's funds to build your position. And at some point in time, those other people are going to call you up and say, hey, look, I know what, you said in that meeting, what your I don't know, what your plans were for the investment, but we're getting real nervous here. I want out. I don't care if I take a loss. How many people are prepared to stomach this $44,000 drop? And it's obviously it's my opinion based off of the analysis, but it's based off of really strong analysis. We're basically in the thing. I can't have given you this target because a lot of times these moves are really fast and furious and they overshoot the basic level of support just by a little bit. So it rings true and it looks correct and it looks like what you've seen, right? If you've seen these liquidation events before, you'll see a strong level of support, and then you'll see a wick ever so slightly beyond that level, but then it'll recover. So 44 to me seems extremely plausible in so many ways, but the analysis is telling me 44,000. If people are not ready, and I'm saying this, I don't have that many subscribers, not that many people are going to watch this video, but whoever does, understand what we're going to see in the next 23 to 30 days is Bitcoin move up to these levels and then start that move. There's no time. Once you're in wave 3, which is the fastest and most impulsive move, there's no time. You cannot choose. You know what? Maybe that guy on YouTube was right. I think I'm going to sell. You won't be able to. You will not be able to. Literally, once this starts, you're done. The exchange will have no liquidity. You won't be able to get on. Just like what happened on October 10th, but a lot worse. Even if you didn't get hit, you're gonna get hit if you're on the wrong side of the trade. It's gonna be pretty extreme. And that's the initial part of the war. The other part of this is not relegated or limited to just Bitcoin. Remember what I said at the outset, and understand, if you've been in this market, how things work. If Bitcoin, even in altcoin season, if Bitcoin trends downwards, especially in a strong trend downwards, it's going to affect the rest of the market. You're not going to be immune just because you're in another asset. So, like Bitcoin going down, and I mean flying down from 100K levels to between 50 and 60K, so flying down 50%. And this, we always say these retracements aren't in a straight line. This is as close to a straight line as you get, wave 3. That's as close to a straight line as you get. You're going to see wave 4 kind of cool things off and go sideways a little bit for a while. And then wave 5 finish it off. But wave 3 is pretty much a straight line. It can happen in a couple hours. It can happen in a couple minutes. Not a couple minutes, a few minutes. But it happens really quickly. You see how wave 1 kind of took its time? It gave you 23 days. It was bad, but it gave you 24 days rather. 24 days. Wave 3, not so much. Wave 3 is bad. And so you have to prepare beforehand. That's what wave 1 and 2 are for. This is pretty much a warning because it's your last chance. The 24-day window that we're tracking, is your last chance to get the hell out of Bitcoin and anything else that's going to do what Bitcoin does, because Bitcoin's not the only thing that's going to fly down 50% or more. And so this is the second part of it. Right, I started talking about how, yes, in these next 24 days, there's a very strong chance, given the, so much analysis, that this, Bitcoin dominance continue to drop. We're in a downtrend, but then it continues to drop, and it really flies down and gives you outsized gain in altcoins. That's true, but not every altcoin. There's some altcoins that are just going to go a little to the upside, like Bitcoin. 24, 25%, 30%, something like that. Others will give you 1,000% or more. Now, if you're in the ones, and you're lucky enough to be in those ones that are going to give you 1,000% or more, even if you fly down 50%, you're good. You got lucky. Nothing to do. It's the Squidward meme. You're suntanning, you look, 50% drop, whatever. I was in the right assets. Even if I missed selling at the top, I go down 50%. I made, 4, 5, 6x in the past 3 weeks? I'm good. But if you so happen to be in the wrong altcoin, And there are a lot of those, a lot more than people understand or appreciate. You're going to get the Bitcoin treatment, where whatever you did from October 10th is just going to be a continuation of, it's just going to be a continuation of down and to the right. You're just going to keep going down. So, I mean, there's no hope. Basically, all I'm saying is the big warning is you could do one of three things. Either you sell at profit once you get here, and you get out of bad assets. Bad assets, I would say things that are already caught in a downtrend, things that are not on structural support, that are going to yield more downside. Or you do nothing and you just leave it up to chance. Or you make sure that if you do happen to get into if you get into good assets now, and you make sure you sell the bad assets at the top to make sure that you're not caught in this downtrend. You prepare for the eventual big move down. So the big warning is basically everybody's going to experience some extreme drawdown in about 3 weeks' time, a little bit more than 3 weeks' time. Question is, if you're so lucky to be in one of those assets that in between then and now happens to go an average of 4 to 10x, who cares? If you're one of those people that's exposed to Bitcoin or other altcoins that are like Bitcoin, that are not on support, you're going to care. That's the warning, okay? To end this video, I'm going to show you something that corroborates my analysis. And I've looked at this for quite some time. I'm showing you the US dollar currency index, okay? What is the US dollar currency index? It's a measure of the relative strength of the US dollar vis-a-vis a basket of world reserve currencies, okay? So typically, if you know US dollar currency index and Bitcoin's relationship, it's an inverse one, okay? And you can prove this to yourselves. I'm not going to take too much time. This video is long enough, but you can take the US dollar currency index on one time frame, a weekly time frame, Bitcoin on a weekly time frame, superimpose them, match the dates, and look at their relationship, and you'll see they're mirror images, more or less, of one another. I.e., when the US dollar shows strength, Bitcoin shows weakness, and vice versa. And that's true for as long as we've known. Generally speaking, big moves down in Bitcoin are accompanied by US dollar currency index surging. Okay? Big moves up in Bitcoin are accompanied by US dollar currency index falling. What you see here and what's been materializing for the past few weeks is the US dollar currency index has been in an impulse. That impulse, I put in this chart years ago. That's not an exaggeration. Years ago. I don't look at this chart every day. I probably looked at it once every 2 months or something like that. But this analysis, all this markup was done years ago. Not an exaggeration. This C wave down to this support level finally hit. What do you get after? Well, after an impulse, a wave 1, you get wave 2. Wave 2 comes to between 0.5 and 618 Fibonacci extensions or retracement levels of wave 1, and it typically lasts about the same amount of time as wave 1. So, I mean, you look at it, you get about 150 days down, you're close to getting 150 days up. So the US dollar currency index is about to go up a little bit more and hit its target right here around 104.5. Remember, if the US dollar currency index is trending up, which this is, you can see very clearly W reversal pattern. It's about to break out, not quite yet, but it's about to break out. It's close to breaking out. You get that, you're going to get a drop in risk on assets like Bitcoin. Bitcoin drops, the rest of the cryptocurrency market drops. Everything that I've said for the past 30 minutes in this video lines up with this very important indicator that people have used in cryptocurrency for very many years. Again, don't take my word for it. Do your research, so that you can have conviction and actually trade the thesis. Don't worry about what I'm saying so much, but use it as inspiration to verify, trust but verify, and figure it out on your own. But you essentially have about 24 days to act. And in those 24 days, whatever you do is likely to either make you a lot of money or lose you a lot of money. That's my analysis. Guys, hope this was helpful. Hope this was useful. Like, share, and subscribe if you got value. Consider joining my crypto portfolio mentorship and consultation service, for which I'm currently running a special, a Black Friday special. It's basically, I don't know what the percentage is, but it's typically $250 per month for the full mentorship. But for Black Friday, I'm running a 6-month special for $997. You can take advantage of that by following the instructions in the pinned comment below. And essentially, the crypto portfolio mentorship and consultation service is where I would help you to identify what assets are on support, what assets are at resistance, what's likely to fly down a bunch like Bitcoin, what's likely within the next 24 days to give you your 4 to 10x gains, and how to position yourself appropriately. And if you're in something that is bearish, how to get out safely, so on and so forth, all kinds of stuff. So that's crypto portfolio mentorship and consultation service. It's quite comprehensive. You have full access to me at any time by email and up to 2-hour video calls per month. If you're just interested on my calls for a single asset, you don't want to make the full investment, but you just want to know, is this particular asset that I'm in, that I'm heavily invested in, is this bearish or bullish? And if it is, where can I get out? If it's bearish, where can I get out? If it's bullish, where can I take profit? That single asset analysis is just $165. Make the payment with any 4 payment methods that I have listed in the pinned comment, and then email me, and you should have that recorded analysis within 24 hours. Guys, that's it for me. Take care. Bye.
My prevalent time slot, I vocalize, too deep to localize. Even when I'm right on the surface, you act surprised how I work this, but I can't lie. Many a good alibi, I'll catch you later. Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest magnanimous. We body vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile?